Stop scrolling for a second, because what I'm about to explain could completely change how you think about the UK property market. If you own a home, if you're planning to buy, or even if you're just hoping to move one day, this is something you need to hear. What's unfolding right now isn't being talked about honestly in the mainstream media, and it's already trapping millions of ordinary families. Make sure you subscribe to the channel right now and turn on notifications, because we're breaking down what's really happening behind the scenes of the UK housing market and why this crisis is far bigger than most people realize. Right now, the UK property market hasn't just slowed down, it has effectively frozen. And this didn't happen overnight. Long before headlines started whispering about a slowdown, the warning signs were already buried in the data. Transaction numbers began quietly collapsing weeks before anyone publicly acknowledged there was a problem. Now, estate agents across the country are using a phrase that should worry everyone: the silent standstill. Homes are sitting on the market for months without a single viewing, and even when buyers do show interest, deals are falling apart at the last minute. This feels eerily familiar to anyone who remembers 2008, and the numbers are starting to look just as bad. At first glance, it's easy to blame high interest rates, inflation, or general economic uncertainty, but those explanations don't tell the full story. There's something much deeper and far more damaging going on, and it all traces back to the recent budget. Hidden behind pages of technical language is a tax trap so complicated that even seasoned professionals are struggling to explain it clearly. This isn't a targeted measure aimed at wealthy investors or property tycoons. This is hitting everyday homeowners who believed they were playing by the rules and doing the right thing for their future. The real chaos has been triggered by the interaction between changes to capital gains, tax, and adjustments to stamp duty. On paper, these measures were presented as sensible reforms, even helpful ones. In reality, the way they overlap with existing tax rules has created a perfect storm. Financial advisors are now telling clients to pause, wait, and do nothing until they fully understand the consequences. When professional advice across the board is, don't move, don't sell, don't buy, the entire market grinds to a halt. That's exactly what we're seeing now. What makes this especially alarming is that the tax trap doesn't just affect people selling today, it affects anyone who might want to sell in the future. Capital gains tax has been restructured in a way that is catching people completely off guard. Someone who bought a second property a decade ago, perhaps as a retirement safety net, is now discovering that up to 40% of their profit could vanish in tax. The allowances that once protected smaller investors and ordinary landlords have been slashed so aggressively that even modest gains are being punished. For many, the numbers simply no longer make sense. The most frustrating part is how quietly these changes were introduced. They weren't clearly explained or openly debated. They were buried deep inside dense budget documents that most homeowners would never think to read. By the time people realized what had happened, their financial plans were already outdated. This is why the property industry is now calling it an accidental freeze. Not because the damage isn't real, but because it appears nobody in government fully understood how destructive these combined measures would be. Stamp duty changes were meant to help first-time buyers, but instead they've jammed the entire system. People who would normally downsize to free up larger homes are choosing to stay put because the cost of moving has become painfully high. First-time buyers who thought they were getting a helping hand are discovering hidden conditions and costs that wipe out the benefit entirely. Every part of the buying and selling chain depends on the other, and once one link breaks, the whole system seizes up. Estate agents are now reporting sellers pulling properties off the market altogether, choosing to wait for political change rather than accept today's reality. Then there's the inheritance tax nightmare, which may be the most emotionally devastating aspect of all this. Families who carefully planned to pass their home down to their children are now discovering that the rules have shifted dramatically. Inheritance tax thresholds have remained frozen for years while property prices surged, dragging millions of ordinary families into a tax bracket that used to apply only to the very wealthy. When these frozen thresholds collide with new capital gains rules, the result is brutal. Some families are now facing the possibility of having to sell the family home just to pay the tax bill on inheriting it. This isn't about billionaires with luxury portfolios and accountants on speed dial. This is about teachers, nurses, and small business owners who worked their entire lives believing property was a stable way to build security. The emotional toll is immense. Online forums and support groups are filling up with stories from people who feel trapped, betrayed, and blindsided by rules they never even knew existed. The situation becomes even more disturbing when you look at how unevenly this crisis is hitting different parts of the country. In London and the southeast, some sellers are slashing asking prices by tens of thousands of pounds just to attract a single offer. In other regions, homes aren't selling at any price. Areas that were already economically fragile are now staring at a potential collapse in property values, wiping out the biggest asset many people will ever own. Meanwhile, even traditionally strong markets are frozen solid, with desirable homes failing to attract buyers. The mortgage market has reacted exactly how you'd expect when uncertainty takes over. Lenders are tightening criteria, pulling products, demanding higher deposits, and reducing choice. This adds yet another barrier for anyone hoping to move, refinance, or step onto the ladder. Industry insiders are now openly admitting that the government massively underestimated how these measures would play out in the real world. Treasury models assumed business as usual. What they got instead was paralysis. The most ironic part is that the policy has backfired financially as well. The government expected higher tax revenue, but with transactions collapsing, the opposite is happening. Fewer sales mean less tax collected, not more. Rumors are circulating of emergency meetings behind closed doors, but any meaningful fix would require another budget, and a public admission that the original approach was flawed. Politically, that's a hard pill to swallow, and in the meantime, homeowners are stuck in limbo. For anyone considering entering the market right now, expert advice is almost universally cautious. The old belief that property is always a safe, predictable long-term investment has been shaken. Young buyers are wondering whether to wait. Landlords are quietly exiting the market, and rental shortages are pushing rents even higher. Every part of the housing system is feeling the shockwaves, and no one can say with confidence where things will stabilize. Some analysts believe this is the start of a multi-year downturn that will permanently reshape the UK property landscape. Others think the market will eventually fall once people adjust to the new tax reality. What everyone agrees on is that the current situation cannot continue. Beyond the economics, this crisis has exposed a deeper problem, a growing disconnect between decision makers and the real lives of ordinary people. For most families, property isn't an investment strategy. It's their home, their security, and their future. When rules governing something this fundamental change suddenly and without clarity, trust in the entire system begins to crumble. Fear replaces confidence, and people stop making decisions altogether. That's the frozen market we're seeing now. Until clear, stable, and fair policies restore that confidence, millions of people will remain trapped in a crisis they never chose and never saw coming. And the real question isn't just how this gets fixed, but how we stop future governments from creating the same kind of trap all over again.